What's going on, everyone? Welcome, Rabid here. And today we're taking a look at, is GPU mining really dead and why? Everywhere we look, it seems everybody is upset with the current profits. And yes, it is true. Profits are pretty much non existent. Let's just take a look at GPU mining coins right now. And if we come into mining pool stats, first page, judging by emissions, which is the amount the coin pays out per 24 hours, which allows them to pay for their security, which is based on, how many blocks are found per day with block time, each block rewards, and then times that by the price equals the emissions per 24 hours. And that's what the miners are fighting for. And in case of GPU mining, our top coin here is Kapow with Raven coin, $9,790. Not very much. And that's the top coin, which is actually a top 10 cryptocurrency right now in terms of emissions. Now, scrolling down to the next GPU coin, next, I believe, at ASIC, so we can't even count that one. Zealous is split between multiple hash rate and mostly just the 170 HXs, which is dominating this, but they're fighting for $2,500. Moving into the next page here, now we're pretty much just looking at crumbs. Like, there's not really any GPU mineable coins here. We got Ergo at 1.4K, like $1,420. We got Epic Cash, 663. There's like no money left in GPU mining. So essentially, yeah, GPU mining is dying and it's not looking good. But why is everyone still mining? I know, weird, right? Everyone says they quit, but there's still so much hash rate online. Are you looking for ASIC miners but just not sure who to trust? From most popular brands to bestsellers to miners of the week and even deals of the moment, ASIC Mining Central has you covered to the cheapest prices out of any ASIC website, as well as import fees will be low with low tax with DDP or invoice, and code RABID will grant you an additional $50 off your order. Head on over to ASIC Mining Central today for all your ASIC mining needs. Links down in the description. Now back to our regular scheduled program. Let's take Ravencoin for our first example here. There's still 4.26 terahash online. And you're like, okay, that's not very much. Sure, at one point it did have, here in 2022, there was 18 terahash. Here in 2020, right after the merge and stuff, there's 34 terahash. But look at this. Back when there was no price on here, there was only 20 gigahash online, 1.4, 1.3 back in 2018, moving to 2020, after that big spike when everyone realized, okay, GP mining sucks, they went off, trying other coins, quit, whatever. We got 1.7 terahash here, and then 2022, which was that bear market, 2.65. We're still double all that hash rate for the past, pretty much 3 years here. We have been at higher hash rates than all the previous lows, and we've had halvings and other things come in, which takes even more from the profitability. So there's still a lot of hash rate online. There's not enough people actually quitting mining to make mining even break even for most parts. The people mining right now are probably the ones that are sitting at 5 cents, 6 cents, 7 cent power. Maybe they're heating their houses in the winter. So it'll be interesting to see how this starts to play out as winter comes over and we start getting in the summer months. Are we going to see a loss in hash rate? That is what some people think. But looking over the past months here, we never really noticed that in the previous drops. As here's January, where it's cold, we actually have a hash rate drop here back in 2024. So you think it would pick up here, but that's not necessarily the case. So we'll see how it plays out this year. But so far, there is still, record hash rates for having a halving event and a very low price compared to the past when this coin was actually paying out more per 24 hours, which is very interesting. Why are miners still mining at no profits? So back in Ergo days, I guess 2019, 2020, we can see 1 to, almost 2 terahash. We hit 2 terahash here in July of 2020. Then it started going up. We're down to 4 here. But currently we're sitting at about 2.46, and it does have a steady line down. So it does look like people are turning off when it does come to Ergo. So I guess that is an enlightening sign. Now it's bad for the chain because as miners turn off, they lose security. But it seems like no money is flowing into these altcoins. So this is looking pretty rough here. But then again, Ergo is not paying that much. As we've seen back here, Ergo is only in the what, $1,000 range or something. Yeah, we're about 1.4K, so $1,400 a day. So not very many miners this coin can support at all. And just for reference, if you guys are curious on, what's a decent coin, just so you guys remember, Ethereum at the time was paying here, at its peak when it was GPU mineable, over $62 million per day. At its lows time here, just before the merge, it was still paying over 21 million. And this time 4 years ago, that was a long time ago. I don't know. When it was only $480, it's still paying $6.4 million per day. So it's pretty, you can see now, this is what GPU miners pretty much need. And this is what caused the huge influx of GPU mining, which made crypto mining extremely profitable. Everybody was talking about it, GPU shortages. Everyone was buying hardware like crazy. Then the merge came, and now you can see we go from $62 million per 24 hours to coins where you add them all up and they're not even paying that much. Take example, Bitcoin right now. Bitcoin alone right now is only doing $30 million. So Ethereum was double of what Bitcoin is currently paying its miners. And there's some massive farms on Bitcoin. So that's just a scale to show you how good GPU mining used to be compared to right now, where the best coin is only $9,000, almost 10. So it is a huge difference in just how there's no money left for GPU miners in this current market. Let's move on to ETC now, where we can see, look at this. Back when, let's just see, when Ethereum Classic pumped to its all-time high in, it looks like in 2021 here, $127. Right now it's only at $8.19. If we look at the hash rate in 2021, we peaked at about 26 terahash. That's because Ethereum was still around. So most people were mining that in the bull run. And, not very many people moved over to ETC, but all that hash rate had to go somewhere. So it looks like the merge happened in this area here because we can see a massive jump in hash rate. And, right now we can see we're at 193 terahash, where the all-time high was only 24 terahash. Also, some fifthings went through, which is unlike halvenings, where you cut the blockchain block rewards in half. Usually they just copied Bitcoin. A lot of coins that do this is Ravencoin, other coins like that, which pretty much just copied Bitcoin's blockchain, and they're just too lazy to edit it. That's just the way I go about it. They just want to say, deflationary stuff like that. What usually happens is miners leave, they get less secure. Halvings don't really help the coins. Prices drop after halvings unless you're Bitcoin. For an altcoin, halvings don't really seem to play out. That's actually pretty interesting there. But anyway, coming into ETC, continuing on, there's nowhere for all of these ASICs to go. So now we're hanging out at like all-time high hash rates, not absolute all-time highs, but like we're sitting at 193 terahash for an $8 coin when it was only sitting at 25 terahash when it was at $127. So you can see the profit level is absolutely pretty much non-existent unless you got free power. So like we're at all-time high steady levels of hash rate at coin all-time lows, and that's why profitability is looking bad, because there's still people mining away hoping that there will be another Ethereum, and so far it's not looking like anything is even close. And for our last part here, just taking a look at some statistics, we can see a lot of GPUs have pretty much came off. We can see the majority of HiveOS stuff is now CPU mineable things. We can see 42% of people using HiveOS is mining XMR. Maybe they got some GPUs in and they're also utilizing their CPU. A lot of people are getting better CPUs for mining these days. CPU mining is picking up, but still at nowhere the level that GPUs were, due to scale and sometimes price, especially with the RAM prices and stuff right now. But we can also see, because XMR is up, we can see the biggest algorithm. Now this is geared towards GPUs, but again, flight sheets that have GPUs in them running random X, 54%, over half of all flight sheets on Hive OS is mining Random X or Monero. Kapow, which is Ravencoin, which we looked at, is 9% in second place here, followed by again with the coins, Raven 5% in second. So GPU mining has dropped off a lot, but still there is nowhere near the amount that we need to turn off to make things profitable. There's still way too much hash rate out there. So let me know your thoughts and opinions on the whole situation regarding CPU mining, GPU mining, and so on. How do you feel this is playing out? Are we going to lose a bunch more miners before the next cycle begins around the 2028 peak, around 2029? Let me know your thoughts and opinions down in the comment section. I'll see you on the next one. Rabid out.